Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an important update about the economy and the investment markets. Well, the first quarter of 2018 is officially over. We're into the start of the second quarter. Again, normal volatility. I've had a few clients, and only a few clients, really either call or email, Brian, do you expect this volatility to continue? Is this normal? So I really thought I would address that in this update video. Volatility in the stock market, this kind of volatility we're seeing, believe it or not, is normal. The last couple years, 2016, 2017, very little volatility. We're at the point of normal volatility. The best thing to do is really turn off the TV, turn off most of these news services that I call the talking heads, where they basically, scream the market's up 200, the market's down 200. That's just emotion. It's going to get you stirred up. It doesn't matter what your money's worth today, tomorrow, or next week, because you're not a 1 or 2 week investor or a 2 or 3 month investor. There's not one client of Resney Wealth Management that is not a long-term client, meaning you're looking to grow your money over a long period of time, grow your income over a long period of time, so you have a successful retirement. So whether you're 90, whether you're 30, or somewhere in the middle, all investors are long-term investors unless they're going to completely liquidate their whole portfolio in the next 3 years, which again is none of our clients, and that would be really no client, in my opinion, who's a real investor. So again, normal volatility. Nobody likes the ups and downs, but ultimately over the next 2 to 3 years, I firmly believe the economy will continue to grow. We're at some fairly stable footing. We like the indicators we see not only in the unemployment numbers, the initial claims, housing starts, wage increases, inflation's tamed. The general things that we would look at for a strong, growing economy are still in play. We're not seeing signs of recession. We're not seeing signs of any big pullback. We're seeing this normal kind of volatility. And actually, year to date, just so you have an understanding, the markets are basically down a couple percent, depending which index you're looking at, or maybe up a couple percent given a year to date. So we're not talking down 20%. We're basically talking almost flat for 2018. Now, if you take a look at the bond market, and again, there's different kind of bonds. There's some bonds you want to own or some bond investments, and there's others you do not want to own. I'm glad to say that some of the areas that we are in for the bond positions and our clients' more conservative investments are actually, in our opinion, spot on. That doesn't mean we're not going to change those tomorrow or 6 months from now or 6 years from now. We'll make adjustments as necessary. Not all bonds act the same, but some bonds may be, or bond investments may be appropriate in this kind of an environment. Remember, not only the stock market, the bond market, real estate, gold, oil, every asset has volatility. The problem that most investors face is all the talking heads on TV seem to talk about is the stock market, up and down. And if you watch this on a daily event, it's only going to drive you batty and emotional, which often leads to bad decisions. I've been managing money for 30 years. We do a lot of daily research on risk management, which is really recessions. We're not seeing signs of that. We're seeing a growing economy. Some of the volatility as of late, different finger pointing. Maybe mainly tariffs right now, talking about with China and other countries. To us, it's going to be a moot point at some point down the road, whether it's next week or next month. There's always a different item to talk about, either positive or negative. Remember, short term, volatility. Longer term, we see U.S. expansion, and we see potentially higher stock prices, not only this year, but over the next 3 to 5 years, as long as we continue on this growth economy. When we feel it's time to make adjustments to client portfolios for risk management purposes, we will do so. But again, this is normal volatility, and as always, clients of our firm, if you have any questions, please give us a call, and make sure you do schedule your annual reviews with our company so that we can sit down with you face-to-face or telephone conference, whichever is more convenient. And as always, we appreciate your business and we appreciate your referrals. So clients, if you have friends or family members or business associates that need quality financial management, real advice, real management, again, we appreciate your referrals. Send us your referrals. We'll treat them just like we treat you. Top notch, great service, great management. We want to do what's right for you and what's right for your referrals. Make sure you do call us with any questions, and have a safe and profitable day.